Hello, I'm George B. I'm the president and CEO of Gold Corp, and we're here at the Beaver Creek Conference with a rather grueling schedule. I think we've got 57 meetings over the course of 3 days, and we're very happy to see a very vibrant market at the moment. So, yeah, we're nice to talk.
Well, thanks for coming on the platform. First time we've met or spoken, so I appreciate that, and we love news stories. It is busy over there. Are they busy with the right type of meetings for you?
You know, we're in a fortunate position. We about 3 years ago, I came on board with the US Gold Corp. We pivoted the company from a sort of pure exploration in Nevada to actual project development. So that's what I've spent most of my time doing these last 3 years. And we're on the cusp of having a shovel-ready project in Wyoming, safe jurisdiction, and we're looking forward to that production. So in terms of who we're seeing at the conference, it ranges from folks who have been following us, interested parties, somebody who is looking for a project production in a safe jurisdiction, to maybe merge or add to their portfolio. Folks who are looking to invest, it's a great time to invest at the moment with the state of the market. And fortunately, we're not looking for money at the moment because we've done all the heavy lifting for our development project. And then really we see lots of folks who are in the market to lend some money, and we'll be looking at project development capital soon.
Okay. It's kind of interesting times at the moment. Obviously, it's been a difficult time. I'm going to go 3 years now for precious metals. It's been tough since the end of 2020. You pivoted to a development story. Now, normally you'd get rewarded for that, you'd think, right?
Well, you've heard about the Lassonde curve, and some of my advisors early on said, if you're in a junior space, always sell at the exploration, let somebody else to do the hard yards. I'm a mining engineer, 16 years with Barrick, so I've been involved with the operation and construction of mines. And so 3 years ago, really our Nevada asset is fantastic, but it's going to take a fair amount of money. The money wasn't there for exploration. The company was looking to perhaps monetize Copper King, which is the asset that I'm working on, which is situated in southeast Wyoming. And I said, you'd be crazy to sell this thing because it's a project that can actually get into operation pretty quickly. And lo and behold, I'm here on the cusp of getting it into operation.
You are, and we'll come to that in a second, but I want to talk about this kind of portfolio construction. You've offloaded one of your assets, you've got another one in the back pocket. Again, in moments like this, that sort of gives you optionality, potentially immediate revenue, or at least the chance of an annuity stream of revenue, however the contract is constructed. Were you on board when that planning was decided on, or because it's been 3 years, so I'm not quite sure about it.
Well, 3 years, yeah. Look, at the idea really was fund exploration in Nevada. Yeah. Some of our founders had made a really success story out of big discoveries in Nevada, and that's really what the thesis was at the time. But it's expensive, so we had we have an exploration portfolio. Our Keystone project on the Battle Mountain Cortez trend. We had Maggie Creek on the Carlin trend, and we also have an exploration property in Idaho. But with the dearth of capital for exploration, moving to develop the CK Gold. Copper King is now CK Gold because most of our revenue comes from gold out of that project. That's why we pivoted to that. But the optionality remains for when the market is ready, and we are seeking partners as well at the moment for our exploration in Nevada. Okay. As you look at our Keystone opportunity in particular, We have near surface oxide opportunities in upper plate rock, but then there's really big elephants. We're situated just about 12 miles down from the Cortez complex. There's over 50 million ounces mined or in reserves or in mine plans, just up the trend from us, and we can turn that on anytime. Our holding cost is minimal, but it's expensive. It's expensive exploration, and we hope to either get a good partner for that, or generate revenue from our development project to fund that exploration.
Right. Like I say, this is not a negative conversation. It's like you're in the right part of the world doing the right things, and you've got the flagship asset is, and I want to talk about the numbers in a second, but we've seen lots of juniors kind of come through the door here and explain why they haven't been able to kind of move things forward, and they've bounced off elsewhere. Doesn't matter whether it's on the Carlin trend or not, which is a good jurisdiction to be in. They haven't been able to kind of manage the money. And that's why I'm intrigued by this portfolio approach of yours to perhaps allow, it says to me, maybe a little bit smarter and a little bit savvy about how you go about managing not just the balance sheet and the bank account, but perhaps getting valued properly.
Well, the thing is that, I mentioned to you I'm from Yorkshire, right? Short arms, deep pockets. So we, with my background, we've got a small team. We're using our money judiciously in order to put the value proposition around the CK Gold asset. And we, as we look at the increased metal prices, the 3-year rolling average now, and where metal prices are at the moment, there's lots of stories out there, but there's no money to pursue them. So we're being prudent with our money. We look for that value creation opportunity in the development project, and as we see that and we see an uptick in the market, we can then refocus back onto exploration. But in the meantime, we've got the development story going on.
Exactly. Because I think one of the things we're hearing is that drilling was often inflationary times. Few drill rigs available, and then lots of them available. It's been a difficult time to kind of manage or plan, quite frankly. Okay, let's get to the flagship project. Right? So remind us of the numbers there.
Okay, important. So pivoting over to development. Our CK Gold project in southeast Wyoming, it's just 20 miles away from the capital city, Cheyenne. Great infrastructure. We're looking, as per our pre-feasibility study, at an $800 per gold equivalent ounce all-in sustaining cost, on the basis of gold at $1,625 and $325 copper. 70% of our revenue comes from gold and 30% from copper, a little bit of silver. But we sell a concentrate, and this concentrate is a really clean concentrate, good product. So that is something which is really exciting, and we've got some very good upside to the project beyond the numbers that we've published already.
Right. Okay. Where we're selling market cap wise today? 60 to 70, depending on the day of the week, right?
We're listed on the NASDAQ. We're in a down market. We're probably hovering around 35 million market cap at the moment. We've only got 9.4 million shares outstanding. If you look at management and insiders and some of the founders, we can probably account for 30% of the shareholding. So as a consequence, we're very sensitive towards any dilution at this particular point in time. So we're fortunate in that we got $5 million US in the bank, and we've done all the heavy lifting for our next valuation step, which is the approval of our operating permit.
Right, in Wyoming. So how long has that been in the mix, and when do you think you're going to get it? Because I'd say what I'm trying to work out, George, is I've looked at your numbers. I'm like, this is a good project, 10-year life of mine, over 100,000 hours production. It feels like I should be interested in this, but market's not valuing you. You can't access the capital because people are unsure what's going on with the Fed. So another rate hike this morning from the ECB. It's a difficult environment. So the $5 million buys you optionality and time as to, when you choose to press the button? Because at some point you can make a decision like, we need to stop spending money.
Okay, look, as you look at valuation, everybody is risk off at the moment. So why would you put money into any kind of a risky venture when you're earning 5-7% risk-free, in a bank deposit? So I think that's a situation that is which is dogging the industry at the moment, and people are looking for those funds. So in our case, we were able to raise sufficient money to get to where we are now, and it's been 3 years. I took the CK Gold project from a standing start. It had been dormant for many years. We had to do all the environmental baseline, do all the drilling and geotechnical work for pre-feasibility study. We continued right on. We've got the feasibility study ready to go. What's that mean, ready to go? Ready to start or ready to put out? It's ready to put out.
Okay.
But we're in inflationary times at the moment. So what we need to do, I don't want a stale-dated feasibility study. So we have Samuel Engineering, our engineering company out of Denver, very experienced in Wyoming, ready to go with the final bid packages for the equipment that we need. So with the final bid packages, we can finalize the feasibility study. The metallurgy's done, the engineering's done, the plant designs, P&IDs, all sorts of stuff. All the heavy lifting's been done, geotechnical site characterization. We just need those final prices from the equipment providers for the process plant in order to be able to finalize that study. So I don't want that to get stale dated. I want to get eyes on the finish line where the permit approval, and then with the permit, the feasibility study, the folks that we've been talking about on financing, we're ready to go.
Imagine on the debt side, that's a bit more of an easy conversation given the numbers that you're putting out. Equity's the hard bit in terms of the type of strategic investor. He may just want money, he may want help in other ways. So how are they viewing what you're putting on the table? Is this big enough? Has it got the scale to be of interest?
Well, look, we're not big enough for the majors, but we're certainly big enough for the sort of mid-tier type of companies. And, we're looking probably for a $250 million package to get up and running. There's several outfits that can write that kind of ticket. However, what we're looking at the moment, we are keeping some of the OEM equipment suppliers close to us. We've worked with them on our metallurgy and our plant designs, so that they're able to supply us the equipment, but also supply some financing. That a lot of the bigger equipment OEMs have access to sovereign wealth fund financing. So we're looking at large, longer-term, competitively interest rate debt notes on the equipment that we need to buy. We're also hopeful that in the state of Wyoming, which is a resource state, there's some business development, notes that we can acquire. And then as we de-risk the project, that equity component, and people recognize the value of the project that we've got, becomes much more palatable. But whether we make up the balance of our initial capital from equity, or maybe some metal sales from our initial production, we don't really want to sell the royalty, but we'll consider everything. But those are all in the table. We think that $250 million is very manageable.
Well, it comes back to that cash in hand. Like I'm saying, it gives the optionality of timing all of the above, and a little bit of leverage too, because the cost of money, say the palatable component, is important. Because I think some CEOs say if you take money when it's there, because you just don't know what's around the corner.
Well, that's that's an old adage. But you see, from the, as I talk to the founders and I look at the folks within my circle, the management friends that have put money into this, we're underwater at the moment. So it's painful to take money take money at the current
But everyone's
rates.
underwater, and there's someone trying to get behind, the thinking, the man, as it were, and the board, because desperate times, people make desperate decisions, and I'm trying to work out where there's a kind of quiet confidence to this.
So look, we've got we essentially, as I mentioned to you, we've got over $5 million in the bank. We've done all the heavy lifting. We raised close to $6, $5 million recently. We're currently trading down at probably 350. We could go out and raise money, and if it's prudent to do so, we would do so if it was a recognition in the market. We don't need to do that at the moment.
Yeah.
But we can do an overnight registered direct deal with investors in Canada or in the United States. It's it's an option that we have, and unfortunately, many juniors are on a burning platform. They have to go forward with their exploration, or else they've got no news, or they have to go forward with the expenditures. We're sitting at the cusp of being ready to move, and it's project financing, which is our next hurdle.
Right. Okay. And then let's look at some of the numbers, because I think that's the kind of key to this. Is the IRRs at today's prices quite healthy, but as you say, inflation is pushing up some of the cost base. So the margin is still there.
The margin is still there. So from our pre-feasibility study numbers, sure, the operating costs, the capital costs have gone up, but so too has the revenue side of the equation. So the margin is still there.
Okay, that's good news. We've got to get out there, start selling.
Thank you very much.
Appreciate that. Thanks.
Appreciate your time. Bye-bye.
Good.